Welcome back to BitcoinDorks, your daily source for cryptocurrency markets and breaking news. Today, we're delving into an intriguing trend among long-time Bitcoin investors, perennial Bitcoin accumulators making significant purchases during the recent market rally. Bitcoin has long been regarded as the king of cryptocurrencies, with its decentralized nature and limited supply making it an attractive store of value and hedge against inflation. Despite experiencing periodic price fluctuations, Bitcoin has consistently demonstrated resilience and long-term growth potential, attracting a diverse array of investors ranging from retail traders to institutional players. One notable group of investors contributing to Bitcoin's continued accumulation are known as perennial Bitcoin accumulators. These individuals or entities have adopted a long-term investment strategy, steadily accumulating Bitcoin over time regardless of short-term price movements. Their commitment to accumulating Bitcoin during both bull and bear markets underscores their conviction in the cryptocurrency's fundamental value proposition and long-term potential. During the recent market rally, perennial Bitcoin accumulators seized the opportunity to bolster their holdings by making significant purchases. This strategic move reflects their confidence in Bitcoin's ability to deliver superior returns over the long term, despite short-term market volatility. By accumulating Bitcoin during periods of price strength, these investors aim to capitalize on future price appreciation and position themselves for financial success. The decision to accumulate Bitcoin during a market rally is not without its risks, as it requires conviction, patience, and a strong belief in the cryptocurrency's underlying fundamentals. However, perennial Bitcoin accumulators are undeterred by short-term price fluctuations, instead focusing on the broader macroeconomic trends and long-term growth prospects that support their investment thesis. One of the key drivers behind perennial Bitcoin accumulators' decision to buy during the recent rally is the growing institutional adoption and mainstream acceptance of Bitcoin as a legitimate asset class. Institutional investors, including hedge funds, asset managers, and corporations, have increasingly allocated capital to Bitcoin as a hedge against inflation and currency devaluation. This influx of institutional capital has provided strong support for Bitcoin's price and contributed to its overall resilience in the face of market volatility. The present macroeconomic panorama, characterized by unparalleled monetary stimulus measures and fiscal stimulus packages, has intensified apprehensions regarding inflation and currency devaluation. In response to economic downturns and financial crises, central banks and governments worldwide have implemented expansive monetary policies, which include measures like quantitative easing and low interest rate regimes. These policies aim to spur economic growth and bolster confidence in financial markets. However, they have inadvertently led to a substantial expansion of the money supply, resulting in a corresponding erosion of fiat currency's purchasing power. Consequently, both investors and individuals are increasingly seeking out alternative stores of value to safeguard their wealth against the erosive impacts of inflation. This shift in sentiment underscores a growing recognition of the limitations and risks associated with traditional fiat currencies, prompting a broader exploration of alternative investment avenues, including cryptocurrencies like Bitcoin. In this context, Bitcoin's unique properties as a decentralized, digital currency with a finite supply make it an attractive hedge against inflation and currency debasement. Unlike fiat currencies, which can be printed at will by central banks, Bitcoin operates on a fixed supply schedule, with a maximum supply capped at 21 million coins. This scarcity ensures that Bitcoin cannot be arbitrarily inflated or devalued by monetary authorities, making it immune to the dilutive effects of inflation and government intervention. As central banks continue to pursue expansionary monetary policies, the appeal of Bitcoin as a hedge against inflation and currency debasement is likely to grow, driving demand and contributing to its price appreciation. Bitcoin's decentralized nature and censorship-resistant properties make it an appealing alternative to traditional financial systems, which are susceptible to manipulation and control by centralized authorities. Bitcoin transactions are recorded on a distributed ledger called the blockchain, which is maintained by a network of nodes spread across the globe. This decentralized architecture ensures that no single entity has control over the Bitcoin network, making it resistant to censorship, seizure, and confiscation by governments or financial institutions. In an era of increasing government surveillance and censorship, Bitcoin's censorship-resistant properties offer individuals and businesses a means of transacting freely and securely, without fear of interference or reprisal. Bitcoin's borderless nature and low transaction costs position it as an optimal medium of exchange and store of value for individuals and businesses navigating a globalized economy. Unlike traditional financial systems, which are encumbered by convoluted regulatory frameworks and exorbitant transaction fees, Bitcoin offers a seamless avenue for peer-to-peer transactions across borders, entirely bypassing the need for intermediaries or third-party approvals. This aspect of decentralization not only fosters financial inclusivity but also empowers individuals and businesses to transact freely and securely on a global scale, irrespective of geographical boundaries or regulatory constraints. This borderless nature makes Bitcoin particularly appealing to individuals living in countries with restrictive financial systems or high inflation rates, where access to traditional banking services may be limited or prohibitively expensive. As awareness of Bitcoin's benefits spreads and its adoption grows, demand for the cryptocurrency is likely to increase, further driving its price appreciation and solidifying its position as a viable alternative to traditional fiat currencies. In conclusion, the macroeconomic backdrop characterized by unprecedented monetary stimulus measures and fiscal stimulus packages has heightened concerns about inflation and currency debasement, driving demand for alternative stores of value like Bitcoin. Bitcoin's scarcity, decentralization, and censorship-resistant properties make it an attractive hedge against inflation and government intervention, driving demand and contributing to its price appreciation. As central banks continue to pursue expansionary monetary policies, the appeal of Bitcoin as a hedge against inflation and currency debasement is likely to grow, fueling further adoption and price appreciation. Thanks for tuning in to BitcoinDorks. We hope you found this deep dive into the world of cryptocurrency enlightening and informative. Don't forget to like, subscribe, and hit the notification bell to stay updated on all the latest developments in cryptocurrency markets and breaking news. Remember, knowledge is power in the ever-evolving landscape of digital assets. Stay informed, stay ahead, and we'll see you in the next video.